first-time entrepreneurs is actually better than second-time entrepreneurs.
Being naive, for example,
Correct.
is sometimes a good thing.
Whenever I meet a company, usually the first call, I don't even talk about the pitch deck. I want to understand more about the way he thinks about it, why he's building it, and can I see this person running this for the next 10, 20 years?
What would be a green flag for a founder for you, and what would be a red flag?
You either have to be the smartest or you have to be the most responsive. You know, I got kicked out of schools, right?
Yeah.
But it wasn't for anything bad. It was always for things like, teacher would be like, why would I do my homework? I'd be like, why do I need to? Like, what's my benefit here?
Yeah, so
right?
you're always interested in why things happen.
Correct.
Why?
Look at Zuckerberg right now, right? He didn't care about scale AI. He just wanted Alexander Wang. So he paid 20 billion just to get him. He spent like close to 100 billion building the super team, but the market cap rewarded him 200 billion.
Yeah.
So it's always, he's like playing 4D chess,
yeah.
right? And OpenAI, like they just lost the person that created 4.0. If you win, then you win big. But if you don't win, you learn an important lesson much earlier on.
Welcome back. We're having another series of our expert series of vitals. We have Richie Armstrong here, who's
Richie or Richard, whatever one works.
Obviously, I know a little bit about yourself. Could you maybe share a little bit about your upbringing, where you grew up, and kind of what you did in your earlier years?
Yeah, for sure. I mean, I'm half Thai, half British. I was born in Thailand, but I guess, you know, from a young age, I've always been a global citizen, right? I grew up living in like 6 countries.
Yeah.
You know, went to 10 schools. I was always a bit of a troublemaker kid. Got kicked out of 3. And yeah, as I say, now sort of like living between, like I'd say, spending a lot of time in Asia, right? And yeah, my day job to date is a venture capitalist.
Yeah, and you just made partners, so congratulations.
Yeah, thanks,
That's a
man.
good achievement.
Yeah. So just more work on boards now, dealing with our investors and combination of things, right? Because we have a very lean team and, you know, sort of like heading up Asia now. So
yeah, are you guys working on
Lots
like
of
a hybrid model? It seems kind of like the trend, so to speak, after COVID.
I mean, look, we have a team of 5 people or so, right, on the investment side. I mean, 4 partners, and then we're sort of covering the globe. So when you think about that, you have to travel quite a bit.
Yeah.
So me, as I say, I'm traveling like 2 or 3 times a month.
So you're wearing many hats.
Correct.
Because there's a lot of, you have a small team, but you're kind of multifaceted and you can do different things, right?
Yeah, but we're quite a like a data-driven firm, right? And we have a very strong network.
Yeah.
So a lot of the deals we do sort of come from our own network. And like, you know, maybe it's a unicorn founder that his friends are starting a new business or something. I mean, just put in comparison, each week I probably speak to like 15 to 20 companies, right?
Yeah.
So yeah.
That's an interesting point. What you said is you have your own networks. And one of the things, actually being a founder previously myself, I do know getting in contact with VCs from the cold outreach point of view is quite difficult. It's probably, and I would like to understand for a new, like say for a startup, you're talking to 15 stuff. What is the best way to get in contact with someone like Richard or Richie?
I think, you know, obviously, I think especially in this day and age, venture is a very sort of relationship business, right? If you look at everything right now, which is changing in the world today, we're moving, a lot of the sort of repetitive things that we do every day are getting slowly replaced, right? And the things that will still probably be around are these relationship-driven approaches, right?
Yeah.
Because no matter, let's say, for example, let's use real estate as an example. If real estate, as I said, you know, no matter how good the AI is, I think for the very expensive transactions, you know, people will not be using an AI, right?
Yeah.
Especially for like let's say $100 million, $200 million transaction.
Yeah.
Right. So ventures is sort of a approach where it's all relationship driven. I mean, it's all about network.
Yeah.
So, I mean, for me, as I say, the whole point of me wanting to go into venture capital was because, you know, I saw Asia, right? And I saw sort of like, I guess, how early venture is in the ecosystem. And if you ask like a room of people, let's say 1,000 people, right? What is venture capital? What is private equity?
Yeah.
I would say maybe 1 or 2 would probably answer that, right? The rest would be like, oh, you know.
Finance.
Yeah, exactly. I mean, actually what was interesting, right, was that the movie Mad Unicorn that came out, that actually helped push the startup initiative in Thailand. And I think started helping people know more about what do startups actually do?
Yeah.
Right? What do VCs do? I mean, it didn't put a good way on that. You know, that was more like a, you know, like a hostile investor, right?
Yeah.
But in terms of, you know, I think it gave some understanding of sort of this world of startups and tech.
Startup is such a broad term, because when does this company go from being a startup to a company, or to not being a startup anymore, right?
I think it really depends, right? Because I mean, we have companies in our portfolio that are doing hundreds of millions in revenue. I mean,
And you call them a startup still?
And we still call them a startup, right? Even
doesn't mean that the specter is so wide.
Correct. I think, I mean, the companies that are so big today, like your Stripes of the world, your Databricks of the world, Canva, they still always stick to first principles from day one, right? Because I think if, you know, the moment you say yourself, you're a big company, right?
Global enterprise.
Correct.
Yeah.
I think the mentality or the viewpoint of the way people look at things changes,
So
right?
you'd say classing it as a startup is more mentality versus representation of where the business is, revenue numbers.
Correct. I mean, I know some startups that are doing tens of billions in revenue and they still call themselves startups, right?
And so what would you say that startup mentality is? What is it?
I think it's, I mean, I had this chat with the Rappi co-founder, right? And he was saying like, Rappi is, you know, a $7-8 billion company in Latam. And we were talking about the early days of Rappi. And he was telling me that, you know, until up to their Series A, Series B, they were still like, you know, everyone was staying in the office. They didn't even have enough tables and chairs. They were all like sitting on tables just so that they can save costs and things like this. It's really having that sort of the startup way of doing things, right? So like, you know, saving costs on multiple things.
Being lean.
Correct. Being super lean.
Wearing multiple hats.
Correct. But I think always like, you know, the example of, let's say some of the founders, you know, they still take some customer calls or things like this, even as the company grows, right? Or they still interview, I think even some billion-dollar companies, they still interview their like, you know, certain key employees, right?
Yeah.
Whereas
I think that's
a large
important.
organization won't really do that anymore. They'll just fire it off to an HR and then get them to do it.
Yeah. Well, it's important to keep the culture and kind of, I think that's what gets, so even for myself, so we opened a shop, we're an online platform, we opened a shop in Ramanai in Central. And I actually, sometimes if I have spare time, I like to go there, spend 2 or 3 hours, and actually go work and talk to people. And because I like to kind of feel and understand what the customer is and seeing them myself. So I think it's important. And also I think it sets a good precedent to also people that work with me.
Yeah, I totally agree. I think in terms of, it sets a good brand image as well for what you want to do.
Yeah.
And, you know, having that sort of omni-channel approach, I think is sort of the way the world is heading, right?
So currently what would be, obviously we've kind of started being a wide spectrum, but what would be your sweet spot? I mean, let's start with personal, like, do you do personal investments or is it only via your fund at the moment?
We do, I mean, I've done quite a bit of personal investments before, right?
Yeah, would that be more early stage?
More early stage, sometimes it's even a pitch deck.
Yeah.
I mean, for example, a company I was privileged to invest in very early was Superpower, right? I mean, that's a good friend of mine. They just closed a 30 million round from Forerunner. They were the early investor in Hims and Hers, things like this, right? So that's an interesting one. Another one is HD Mall, right? Co-founders A-commerce, very strong team. There's an angel there, but then I brought it to the fund as well later on. And yeah, just a bunch of cool stuff. And recently they backed Uber for armored cars in Latam as well. So for me, as I say, it's like, you know, I think what I'm trying to do, right? Because it's all about network driven, right? And you don't know who is going to be like this next entrepreneur, the next Zuckerberg or something, right? And for me, what I've sort of looked at is that every time that there's an interesting idea and there's this founder that is just like, you know, is much smarter than me in that particular area, I'll just try to allocate some capital, whatever it is, right, to that area.
So would you say you're focused on a specific, like, do you have like your investment thesis is strict, or you're open-minded to different businesses?
I'm focused on people. I'm focused on people, so I like to back people, right?
So you're founder
I'm very founder-driven. I'm very founder-driven, right? I really care about the way they look at the problem, right? So whenever I meet a company, usually the first call, I don't even talk about the pitch deck, right? I talk a bit about it, but I want to understand more about the way he thinks about it, why he's building it, and, you know, can I see this person running this for the next 10, 20 years? Because, I mean, you have some founders that just want to, you know, start things and then, you know, make a bit of cash and then, you know, shoot off,
So
right?
the more money, like you prefer someone that's passion motivated versus money motivated.
Correct. But obviously that's not always possible,
Yeah.
right? Sometimes people are starting things because they really need to, and you have that combination effect. I think that could work as well. But I mean, if you're just starting it and then, because it's already so tough, right? Like you look at the founder of Nubank. Why did he start Nubank, right? Because he was waiting at one of the banks in Brazil, waited for 4 hours and couldn't even open an account. Right?
It's a real pain point.
Correct. So really, I think experiencing that pain point really helps you understand it. Plus, sometimes, as I say, first-time entrepreneurs is actually better than second-time entrepreneurs, right? It really depends on case by case. So second-time founders, sometimes,
they've been through it.
They understand it. So, I mean, they have a good shot at building a massive business again. But then again, in sort of very interesting industries where maybe it's highly regulated, founders that are, let's say, very new to the industry, right?
Yeah, which is being naive, for example, is sometimes a good thing.
Correct. Because let's say if you're in the banking industry in like it's Thailand or Southeast Asia or whatever, right? And you say, hey, I want to build a neobank, right? Or I want to build a sort of a stablecoin business, like a full stack infrastructure business using, stablecoin rails, right? Yeah, you would never probably build that if you were a banking executive for 20 years.
Yeah.
But if you are like this fresh grad out of, I don't know, MIT or dropped out of MIT or whatever, right, or anywhere, and you looked at things from a first principles and you saw the opportunity, you would think of it differently. So it really depends on a case by case.
Yeah, because if you come from that industry, you might think you have all these preempted perspectives on things.
Correct. Exactly.
Okay. And I guess right now, are there any, I know you guys just did a deal with Flash Coffee.
Yeah.
Can you tell us a little bit more about that?
Yeah, we can. I mean, it's out all over the news.
So how did that
now,
happen?
Right?
And
I mean, that was an interesting deal, actually. I mean, we all know the story of Flash Coffee, right? I mean, a very interesting company. I mean,
it's no longer in Thailand now.
It's not. I mean that we offloaded the Thai assets, but
I actually think I was a customer at one point.
Good. But be a customer in Indonesia, please. That's our core business. So I mean, actually, for Flash Coffee, right? I spent a lot of time analyzing the coffee market, about 4 to 6 months, right? And I sort of looked at all the players in the region. I looked at Kopiku. I looked at all of them, like obviously larger players like Kopi and Angan and things like this. In Philippines, Pickup. Obviously, large players like Arabica. I think you're a shareholder of Arabica, right? So not competing, but it's okay. And I mean, and also the incumbents, right? The likes of the bigger players like the global corporations and things like this. And what I saw in Indonesia was that it's sort of splitting into a different market, right? You have a very high middle class income population that is growing, and this is a population of 300 million people. By 2030, by 2035, we're probably looking at the fourth or fifth largest economy. So obviously, the way you look at venture, you need to have some, sort of exposure there.
Yeah.
Right. So that's why I'm starting to spend quite a bit of time there, because as you say, the market is growing very fast. Right. So when it comes to Flash Coffee, I looked at all the players and was like, this is a company that previously, I mean, as I say, was in Korea, was in Japan, raised a lot of capital.
Everywhere at one point.
Raised a lot of capital. Sort of had that rocket internet mentality. Right. Move fast, break a lot of things, right? But now, as I say, we sort of came in, helped restructure the whole business, and then led the round with one of the leading venture capital firms there, and then came in and actually brought in new management. So we brought in the global head of Food Panda, who built that business from scratch, 50 million in revenue to 5.5 billion.
Wow.
In 11 markets. And then we brought it was just announced yesterday, but we brought
CEO,
in the number
right?
2 at Foray.
Yeah.
So Foray just went public.
Yeah.
So we managed to bring him into this team. And then also we have a very good CMO who actually used to be the creative director at Ted Baker.
Oh, wow.
And also...
I actually looked at your CEO. He actually started out as a barista at the start of his career. And kind of, correct me if I'm wrong, but he built his way up through a coffee chain and moved into retail.
Correct.
It's kind of like it's quite a good story.
That's what we like about him, right?
That goes back to being a people person.
Exactly. So whenever we were picking out the leadership for this, right? Because I mean, being on the board, you sort of see all these things, right? And then we were looking at the team, and then he was one of the early days at Starbucks, right? And then as I say, he spent a lot of time at Krispy Kreme. He spent a lot of time at all the players, right? And then he's it's like when you see someone working in like coffee related stuff for 20 to 30 years,
He knows a bit
you know
about
they're
it.
going to know a thing or two, right?
Yeah.
So you have this guy, and then you also have Jacob, who, you know, as I say, is probably one of the best operators in Asia right now. And yeah, as I say, you know, Food Panda, I mean, not now, right? But in terms of before, was a business that was thriving, was head to head with Grab, was head to head with Line. I mean, as I say, I mean, I was catching up with the Line team yesterday, but you know, we were talking about like, yeah, the head to head sort of wars early on, right? But yeah, obviously after that after he left, that sort of changed.
Yeah.
But now he wants to. We see Flash as a potential big opportunity.
Yeah. Would you bring it back to Thailand or?
No, we're just purely focused on Indonesia right now.
Okay.
Because we believe we can really get to around, right now, sort of our initial thesis is we believe we can get to 500 to 1,000 stores.
Yeah.
By the end of the year, we should have about 80 stores. By the end of next year, maybe about 140.
Yeah.
So we're just scaling up from there, right? Obviously with the sort of...
And what sets Flash apart from the competitors at the moment in Indonesia?
I think we're targeting a different demographic, right? You know, as I say, we're targeting sort of this rising middle class population that is like, you know, and we're trying to build like a cult-like community, but in a good way, right? Sort of have people that are really driven by the brand, the lifestyle, right?
Culture.
Wanting to understand the lifestyle. And like the way we sort of want to push Flash is we want to say that, hey, you know, as your income grows, as you do more things, you know, you grow with Flash, right? And that's what we're trying to create. This is why whenever we brought it, like, as I say, had the CMO on like fully, this is why, you know, the background of this guy, I mean, he was head of global branding at Puma, international global branding at Puma, worked in Zurich,
and
right?
Puma actually went through a rebranding over the last 10 years and has become, no offense to Puma, but it wasn't very cool for a long time.
Yeah.
But now it's cool.
It's okay.
I think they have Jay-Z is like one of them.
Yeah, I mean, they have a lot of people, right?
Yeah.
I think
we're seeing Usain Bolt also.
Like yeah, exactly.
Became cool again, actually.
Exactly. But I mean, just like, yeah, so that rebranding, I think, is quite crucial. So that's what we're trying to do with Flash right now, right? That's why I do spend a fair bit of time. But no, Flash is, usually it's not a typical venture case, but in this case, I saw a potential venture outcome.
Yeah.
Right, if it did work out. Because, I mean, at a high level, it looks like a private equity play, but you dive deeper into the company, you can see a venture-like outcome.
Would you say it's a food tech business?
I don't say that. I would say, like, obviously you have stores, you have the CapEx side, things like this, right? But, you know, there is a venture sort of outcome there, right? So I think when you look at venture, when we look at venture, we look at things in three buckets. We look at things that are obviously like moonshots, right? So a moonshot is like a 500x or 1,000x potential, right? So this can be anything from, you know, biotech, bring the, you know, longevity drugs to the market, like to, as I say, you know, space tech, space technology, things like this, or certain areas where, you know, we're looking at things that are, you know, have 1 in 1,000 chance of working, but if it works, it's going to be massive and benefit a lot of lives, right? And do good as well. And then we have things in another bucket, which is sort of the 30 to 50x opportunity, right? And those are things where we see could be a potential fund returner.
Yeah.
Right. And then we have things that are in another bucket.
Would you say they're lower risk, so to speak?
Not low risk, right? As I say, lower, lower, right? But I mean, like,
you're kind of in the risk game, right?
Correct. And then, for example, and then it's all about your hedge as well, right? So, and then you have a 10-20%, and then the other sort of bucket is the 10-20x outcomes we see. And those are, like, as I say, the ones that say, okay, if we do execute on this, then we can see a 10-20x, whether that's an IPO, M&A, or whatever, right? Because think about it, if you can build a strong brand, you know, the free cash flow of these global, you know, F&B businesses, and the market size of a country like Indonesia is massive, right?
Also, I mean, going back, so I know you're quite focused on Indonesia. Are you looking at also some deals, or any interesting deal that you can talk about at the moment in Thailand, or are you looking to source more deals here?
I mean, look, as they say, we're a global fund, right? We allocate capital all over the world. You know, so 50% of our exposure is actually US still. 25% is Europe and 25% is Asia. So we're growing the Asia exposure right now. So we're not limited by geography. Right? Where I think we see I think we look for the people and then look at the markets as well, right?
Yeah. So you have an agnostic approach to it.
Correct.
Where do you think in Southeast Asia, let's just focus on Southeast Asia for now,
Sure.
specifically is kind of the tech hub right now? Do you think it is Indonesia?
I think it's starting to develop again, right? But obviously, I think with the sort of liquidity issues and things like this, it's still a relatively tough market, right?
Yeah.
Venture in Asia is very tough right now, like in terms of the amount of capital we have to deploy, things like this. I mean, startups. There's
a lot more rules and regulations. Like, for example, I'm sure, like launching Uber in the US. Not saying it's easy, but yes, it's easy. There's more kind of obstacles that you have to go to save you to do it somewhere like Thailand.
Correct.
It's not so black. A lot of these places are not very black and white.
Correct.
Which makes it, as an entrepreneur or founder, you have to navigate a lot more problems, I'd say, maybe?
I think it's all about setting your sort of perspective, right? So, I mean, being realistic on your potential outcome, right? Obviously, if you see a regional play, I mean, building a 10, 20 mil business is good, right? 30 million even.
Yeah.
But that's not what we look for in venture, right? Because to make the numbers work, it has to be quite sizable outcome, right? Let's just use simple maths, right?
And is that why like B2C businesses do well in Southeast Asia because of the amount of people?
I think so. But then again, B2C is very tough to crack because you have the massive incumbents with large distribution channels. So you're really having to sort of engineer a unique go-to-market to scale from that point of view.
Yeah.
Right. Otherwise, it's just very tough. Because think about it, right? If the likes of Grab or Gojek or whatever are going to launch a product, right? Why is your product superior unless you're looking at them from a different way? So it's like tackling the areas which are just very like incumbent driven and stuff like this is pretty interesting. I mean, what I'm seeing right now actually is sort of this like roll up play, right? But these like AI roll up play. So a lot of these venture private equity guys, what they're doing is they're starting these funds and they're going after, let's say the S&P 500, right? You have 500, obviously you have 500 companies, but in terms of you have 7 that are like really, really pushing the market, right? They take the market to new highs. That's the Nvidias of the world. That's the Apple. That's the Tesla. That's the Teslas. That's the Microsoft. Things like this. But then the other rest are haven't performed well at all.
Yeah.
Right. So what these VCs are doing and investors are doing is they're putting capital together, buying up these old like accounting firms and pulling them together, and then leveraging AI to build a market dominant player.
Yeah, like
right?
a tech-enabled...
Going after the incumbent player that doesn't move in, let's say, I don't know, this traditional accounting business that has been around for 20, 30 years.
Because there's still a need from it. It's just, would you say it's outdated? So it's kind of giving it a modern twist?
Correct. But it's like showing that if the incumbents aren't going to do anything there, as I say, people will find a way if there's margin to be made.
Yeah.
You know what I mean?
Exactly. Yeah, that makes a lot of sense. Okay, so then I guess going back to, you said you're very founder driven. Is there any kind of, what would be a green flag for a founder for you, and what would be a red flag?
I mean, well, I spoke to like thousands of companies, right? But I mean, so I think it always depends on a case by case.
Yeah.
Right. But sometimes I think at the beginning it's all about, firstly, why they're starting it, right? And is the reason why they're starting it, does it make sense? And then, as I say, can I see them like having a sort of I always look for that unique insight, right? What do they have that like others don't look at, right?
Yeah.
Because as they say, where you sort of need to be as a sort of a founder and investor as well, you have to be quite contrarian, but you have to be right as well. So what data points do they have to like back that up? So that's usually an interesting sign as a founder. But 2, as they say, I really like people that move around, not necessarily move around a lot, but have moved in a lot of countries. Not because I did that, but because
exposed to lots of different cultures.
Yes, because it shows that they can be efficient in multiple markets, right? Because every time you move to a different country, you have to quickly adapt to society, whether it's the food, the places and things like this. And
the laws are different.
Correct, right? So that's the first bit. The second bit is, I always ask a founder, what did they start when they were young, right? What did they do when they were young, right? And it's always a perspective of, how do I say it? They start something, whether it's a lemonade store, like as I say, an accounting firm or a consulting firm at like 15.
Yeah.
It's always something interesting, right? because I want to see what they did when they were young, like growing up, and like even if I don't care if it failed, honestly, right?
Yeah.
I just want to see them actually founders that
Mentality.
yeah,
also.
exactly. So what did they do, right? So those two are probably the most valuable things, and like three is like yeah, as I say, being extremely mission driven
Yeah.
on the problem, right? Like, can I see this founder working this for 20 years? I mean, he's super smart to build everything else, but he was born to build this,
Yeah.
right? That's what we look
Yeah.
for. It's easier said than done, but yeah.
And then I guess what are some, so those are the green flag, what are the red flags?
Red flags. Okay.
I see some memes about like VCs that just invest in new founders and they're kind of
Yeah,
like,
have you seen the memes?
Yeah.
Have you seen the memes?
they'll get their first check and they'll go buy like, company boat trip or something like that. But I'm sure
Yeah, exactly.
So yes, what are some red flags? I mean, besides obviously what would be
red flags? I mean, like, so I'm a super responsive person. I think in this business or in this day and age, I think it's like, as I say, you either have to be the smartest or you have to be the most responsive. Right?
Most responsive, kind of like hardest working as well, right?
Responsive or hardest working. Because let's say for a founder, right, as an investor, right, as on the cap table, you're either the smartest or you're the most responsive, right? Because that's the only two things a founder needs, right?
And
you either
the
reply to your messages all the time, or you're just like super smart and you help them structure everything and things like that. So you're trying to be one or the other.
And usually the investor is smart. That's why they're in a position to be able to invest.
Correct. I think it's, I would say that is obviously, venture is a very tough industry to crack, and it's still a very closed off industry, but I think everyone in venture has a unique perspective of the way they look at things, right?
Yeah.
I think, for example, the reason I sort of got into venture was I was always a sort of a curious kid growing up, right? I mean, if you look at my background, I mean, I got kicked out of schools, right?
Yeah.
But it wasn't for anything bad.
Well, can you say what it is?
Yeah, of course. It was always for things like, like challenging the status quo. Like teacher would be like, why would I do my homework? I'd be like, why do I need to? Like, what's my benefit here?
Yeah.
Like,
I know it or something like
and
that,
I was asking this at like 12 years old.
Yeah.
Right.
So you're always interested in why things happen.
Correct.
Why
exactly. So the thing is, I think in venture, it's all about the curiosity aspect. So I think as sort of like I grew up and evolved, right? The curiosity always stood, and sort of the why and how it just evolved.
Yeah.
So from a young age, it was why I need to do my homework. Why would I need to go to these classes? Like, what benefit would it be for me if I'm just going to get something that as I say, a lot of other people have, and what is my how am I going to stand out? Right? To now, it's like why and how we can do things better in society and replace the existing things in society and do them in a much better way, at a much scalable way that can be more impactful for people.
Yeah.
So, yeah, I would say in my side, I mean, the curiosity aspect was always there. And I think that's one of the number one traits you need in this industry.
And just kind of, obviously, I come from a wellness background and I've done that for a long time. What are your views on, health tech, wellness, specifically in Southeast Asia? Do you think it's a good industry to be in?
I'm quite bullish on it, right? Because I mean, if you look at sort of the Maslow hierarchy of needs, the basic needs are like food, water, housing, things like this, right? And as people earn more income, you sort of have the nice to haves, right? Like, go on that holiday, get that, maybe even before that, get a bank account, right? Yeah. Then go on that holiday, right? Things like this. And then eventually it's going to be the things like, oh, how do I treat myself? Look, how do I, as I say, reward myself, right? And that's where wellness comes in, or things like this. How do I take better care of myself, right? And you look at sort of in Europe, US, these are big trends. For example, as I say, I mentioned superpower, right? They're sort of going after the, sort of the wellness space, right? Not just wellness space, but allowing people to really take care of themselves. And, say you do a test, you go do a test at a hospital, like a Bumrad or something, right? And you get all these sort of data, right? And you get a bunch of paper, and you don't know what it really means, right? But imagine in this future where you can have sort of some AI sort of tool, right? Where, how do I say it? You can essentially know what your biomarkers are now, exactly when, and then imagine in the future you can know in real time as well, right? So, hey, Charlie, my blood pressure is low on X in terms of, please refill my vitamin or iron levels, right? And your AI assistant will
Like a
automatically renew
real-time
it.
supplement,
Correct,
vitamin,
correct,
deficiency trigger,
correct,
something
exactly.
like that.
Not just that, but imagine if you can have a 365 degree of your health all over the time,
Yeah.
right? Because a big trend, actually, I've been looking into, a thesis I had was preventative healthcare and precision healthcare, right? So preventative, obviously, I think is very important. And then precision as well is targeting sort of different approaches for different people.
Yeah.
So those are two areas which I'm quite bullish on. I think for Southeast Asia, we're still at the early days of like healthcare. I mean, obviously,
Are there any interesting players that you see in the market right
in
now?
Southeast, I mean, HD, right?
Yeah.
HD, right? They're sort of making, I guess, going to your hospital clinics and things like this much more transparent on the pricing, right? Think of like a booking.com, but for healthcare, right? And they're sort of slowly moving into these sort of high ticket items, which is quite interesting. And they're actually looking at sort of building the software layer as well, potentially, for these, clinics, businesses, and things like this, where, they can leverage AI quite a bit.
Yeah, well, I think you hit it on the head, is because I look at it from these 3 point of views. Is, there's the people that are, they're living, or they're earning to get by, to live.
Yeah.
Then there's the people in the middle, which they want to have better health, better better lifestyle, better quality of life.
Yeah.
And then at the top end of the spectrum is people that want to live forever.
Yeah.
Have you seen the guy Brian Johnson?
Yes.
Does he have an opinion on
Yes.
kind of what he's doing?
I think, look, everyone has their own different perspectives, right? I mean, all these, you've seen the documentary, right?
Yeah.
Yeah, I mean, it's pretty interesting. But I mean, as I say, I guess not everyone can do what he's doing, right? I mean, remember, this is
expensive.
This is a founder that I know he spends $2 million a year doing this, right? I mean, but he sold his company for, I don't know, $500 million to PayPal or something like this, right?
Yeah.
So
afford it.
Exactly, right? But I wouldn't say it's needed as much, right? I think it just, as I say, because the goal is you want to democratize this access eventually for everyone, right? Because obviously at the beginning, you look at
that's why I like Mark
of
Cuban's business, cost.
Yeah, that's interesting as well, because I mean, obviously,
price, drugs plus.
That's offering more transparency. But no, I think as you it also starts off at the technology is very expensive, so therefore it's only for a certain amount of the market at first, but then eventually it becomes mass, right?
Yeah.
You look at everything in technology, right? Think about it, 10, 20 years ago, even 30 years ago, right? A genome cost to sequence a genome was hundreds of millions of dollars.
Yeah.
Now it's less than $50 or $100.
You see, I think that's probably where stem cell will eventually get to. I know stem cell right now is, I think you could spend $250,000 on some treatments over a few days, where I think hopefully, next 10, 15, 20 years, it will become more affordable.
Correct.
So everybody can get it.
Correct. Yeah. I mean, that's, and I think obviously that will help benefit a lot of people as well, right?
Yeah.
And I think things like AI and machine learning is sort of bringing this reality.
Do you think that helps bring the costs down as well?
100%. I mean, it's massive, right? And even in healthcare, companies are much, much more efficient using AI and things like this, and also as I say, working with these humans as well. So it's a combination of this approach, right? So I don't view that AI will take people's jobs, right?
Yeah.
My view is that
enhance them?
One, as I say, it will enhance them, but it will take people's jobs that don't know how to use AI. The ones that know how to use AI.
Do you use AI daily?
I use AI daily. I use AI daily for everything.
Yeah.
From everything from calls, as I say, a lot of my calls, as I say, after the meeting, I have a full AI summary of notes, whatever it is, because sometimes I'm on 4 or 5 back-to-back meetings, right?
Yeah. And you can I know this, you can actually record, so AI can record your call, and it can summarize maybe in the top 5, 10 points. You can always go refer back to it if you need as well.
Yeah, I just recently wrote a small check into this company called Natura, right, in the US. It's pretty incredible what they're doing. Imagine just the future of having an earbud, right? You saw what Humane was trying to do, right? But these guys with the earbuds, right? And then they've been able to, they have their AI assistant on this, and then not only that, but they have these AI agents, right? So let's say, for example, you're feeling tired, you just turn on these earbuds, and it's saying as I say, I'm feeling a bit stressed. What should I do? And it will connect you with a therapist on the thing. And it'll be how are you feeling today? Thing. And then it'll be basing all your data before of how you, and this is not something I'm talking about like 2 to 3 years later.
Yeah.
This is something that's releasing like in a couple months.
Actually, I just saw like a few days ago that Gentle Monster, which is an eyewear brand, did a deal with Google for their glasses.
Yeah.
So it shows that, that's going to be something very real soon as well, where people are going to be walking around with not these big kind of goggles, but actually stylish glasses with
if you look
built-in
at
AI.
Google, right? Google made the bet on, they had released the glasses a while back, right? But I don't think it was like the right timing.
Yeah.
But if you look at sort of the explosion of AI right now and the source of the explosion of Gentle Monster as a company, right? Everyone knows about
tech,
it. Correct. So I think that's what they're targeting, right? Because think about it, 100 million for Google, that was 100 million investment, I think, for 4%. But that for them is nothing, right? Google produces what, like half a trillion in revenue on a yearly basis. So it's
nothing.
What's
but it kind of buys them
what's
into
100 million to them, right?
It buys them into this market of cool.
Correct.
So they're kind of creating that culture of
it's like, look at Zuckerberg right now, right? It's very interesting, like what he's been doing.
Yeah.
I don't know if you've been seeing
I follow
it,
him.
right?
He's now like a watch enthusiast. He's like
not just that, but he saw he was behind on the race on AI.
Yeah.
Right. So what he did was he just said, like, for example, because he looked at his market cap. His market cap is 1.8 trillion, and he looked at it and was like, hey, my market cap's 1.8 trillion. I'm going to allocate 100 billion so that I can be a leader in AI. Yeah. So what he did, he bought Scale AI. He got Alexander Wang.
Yeah.
So that was a company that was 30 billion. He didn't care about Scale AI. He just wanted Alexander Wang. So he paid 20 billion just to get him, right? To hire him the next day and have him at Google, have the office. Paid all the investors, which made like good returns. This is good for the ecosystem.
Yeah.
Because back to LPs means more capital deployed.
Yeah.
Right. So 20 billion back the next day to the obviously it takes a bit of time, but back to the LPs.
And they're going to reinvest those in more AI businesses.
Correct. Exactly. Right. Which will be a net positive. And then you get Nat Friedman, who is the GitHub CEO. They just hired him as well, and they just went to poach every single AI top talent from OpenAI and Anthropic to build this super intelligence team. Yeah. So what they did? They gave $100 million signing bonuses to everyone. Well, obviously they had to be good, right? But in terms of to a pool of people, and now because of that, Meta's stock price was up 12-14%. 100. So that you look at the math, right? He spent like close to 100 billion building this super team, but the market cap rewarded him 200 billion.
Yeah.
So it's always he's like playing 4D chess.
Yeah.
Right. And OpenAI, like they just lost the person that created 4.0.
Yeah.
03, all gone to Meta. Like I thought Meta was out of the race, but now that's why.
But he also went through a personal rebrand where he's become more. I think people didn't find him relatable before. Mm-hmm. Where now he's becoming. Who knows if he's becoming more relatable. Like he's being more social. He's exposing more about his personal life.
I think that's what's so important in this day and age, right? Even like the top, CEOs and things like this, or top people. I think distribution is massive, right? And if you can sort of help build a personal brand and things like this, I think that really helps your core business as well.
Yeah, because people can. I think also who you align yourself and associate with, you can then tap into those networks as well.
Exactly.
Like you're saying, it's a network effect.
Correct. Exactly.
I think what they say your network is your net worth.
Yeah, the 5 people you hang around with is probably how your base is. Yeah. So if you hang around with 5 unicorn founders, right?
Yeah.
There's more chance you're going to be a unicorn founder as well than, let's say, 5 founders.
He surrounds himself with the best in their fields, right? So whether it's UFC champions or artists, creatives,
because then that helps you to be better.
Yeah.
Right. Like for example,
you push each other.
Exactly. Because I'm extremely grateful. I was able to, as I say, enter this venture industry and like grow quite significantly there. Because every day you're meeting really, really smart people.
Yeah.
Like you're meeting, not even forget about their titles, right? Like PhDs or whatever. That's it's a standard, right? It's a lot of people have these already, but in terms of you're sort of looking for these like really ambitious people that just
and they push the way you also think.
Push the way you think and everything like this, right? Yeah. So yeah, it just helps you be better as well.
It is good to kind of also, the more perspectives and opinions you hear, and from obviously respected people, it helps you open up the way you probably think about things and you look at your own businesses.
I always think of things from a first principles. I'm always a logical person.
Yeah.
Right? So I'm quite a data-driven person, so I like to before I look at things, I look at the data, right? So and then, for example, and then I guess everything I do now, it's just everything is an opportunity cost, right? Because I look at it like, you have 24 hours in a day. If you do this thing, will it, like what's the ROI? Not just that, but I think you have
time ROI.
The time ROI, right? Because time is something, it's very hard to, you can't really get it back, right? The time thing. That's why, you only have 24 hours in a day. Make the most out of those 24 hours in a day, so then you can then grow from there, right? And then, as I say, because capital, things like this, there's so much capital into this day and age, right? Time is something you can't get back.
Yeah.
So spend the
most valuable thing,
spend the time on the things if you're in the position to or have the opportunity to spend the time doing the things you love.
Yeah.
Or not just the things you love, but the things that you're most passionate about.
We're speaking about time, so I guess as we're wrapping up, I've got a couple more questions. So yesterday was the halfway point of this year.
Yeah.
How are you spending your time for the next, to close out the second half of the year? What's your focus? Anything exciting you can share? Or
Look, I'm traveling like 2-3 times a month, but for work-related stuff, right? Because I cover the whole region, so I need to spend time in those markets. Yeah. I was just in KL. Before that, I was in China for a bit, Paris, things like this, right? So
a lot of travel.
A lot of travel. Traveling next week. It's like, let's say traveling and then break and then travel, break, sort of thing.
Yeah.
Right. I'm going to spend some time in SF as well. That's what I want to do.
And that's because you want to be closer to kind of...
I want to spend more time in the ecosystem, right? Just like I'll spend like a couple weeks there, sort of thing. That's what I want to do. And then, look, as I say, it's a pretty hectic schedule. Probably mainly like Asia travel, right? But also I want to spend quality time with also friends and family as well. So just like looking at that, right? But it's not like I would say like there's a particular destination I want to go to or anything like this, right? Because it's more about just finding the time.
Yeah, to do it.
Back to the point about time, right? You have 24 hours in a day, and then from the minute you spend the time, as I say, especially travel has become much more accessible now, right? So yeah.
And I guess kind of my last question would be: obviously, you're in the VC world, you deal with a lot of founders. Could you see yourself in the future becoming a founder? Like I think you've obviously been involved in a lot of startups, but could you see yourself founding a business in the future?
Yeah, look, as I say,
you're still young, right? You got a lot of time.
Look, I think age is just a number, right? I think if you can do it, you should just do it, right? Especially at this young age, you take the biggest moonshots wherever you can, obviously calculated risks, right? Asymmetric bets, right? Where there's more upside than downside. Because I literally on my phone screensaver, right? It literally says like, I never win. I never lose. I either win or I learn.
Yeah.
That's because I think that's a mentality you should have, right? Because if you win, then you win big, right? Especially in venture.
Yeah.
But if you don't win or you lose that particular area or that particular maybe deal or something, you learn an important lesson much earlier on.
Yeah, and those losses, so to speak, some of them are really losses, but you can also grow from them.
Mm-hmm.
You can take that and then you can enhance and do something better.
So back to the founders and operators, I think where best suit is on the sort of the buy side role, right? So obviously the sort of the high level venture perspective, right? Because I think that's where because I'm quite a network person as well, network driven person. I feel like I can help the most there as well, right?
Yeah.
And look, as I say, I'm super passionate about, I guess, wanting to make Southeast Asia and emerging markets sort of be more known on the map, right? Because I think, if we look at sort of the outcomes in Southeast Asia, we still haven't had any massive significant outcomes.
I think there's a lot of opportunity here too.
There's a lot of opportunity, but I think we have a talent. We need to find talented people, right? I was just joking forget about like funding, doing these like initiatives with 1+1 sort of thing with the public sectors, right?
Yeah.
Just do movies, right? Look how Mad Unicorn performed.
Yeah.
Right. Imagine we did a startup story for every particular market. Because I spoke to a lot of people, and like a lot of people are very inspired to, start something afterwards because they felt like, they can really do it, right? So why don't we just put the budget to films?
Yeah, it's a lot more entertaining, right?
Exactly,
Yeah.
exactly. Because I mean, look, it was on what, Netflix for like top one for like a month,
Yeah.
right? So yeah.
Well, nice. Well, thanks for coming today, and
No
I really
worries,
appreciate catching up with you. And obviously, I wish we could go longer, but
Of course.
maybe we'll do a part two sometime
Of course,
soon.
we'll do a part two. Good to see you.
Yeah.